The traders at Axis Bank say they expect the bearish sentiment for bonds to continue today after bond yields declined by 3 basis points across the benchmark curve on Thursday. Senator Audu, fixed income trader at Axis Bank, joins me for weekly wrap and expectations for the coming week. Senator, thank you for taking the time out to join us today. Let's have you bring us up to speed on trading at the bond market and, of course, those mixed sentiments on the part of investors.
Thank you, Esther. Thanks for having me. So as you rightly said, we've witnessed an upward trajectory in the bond market. We saw rates at the last auction that held in March close at 10.15 for the 2026s and 12.7 for the 2042s. We've, however, seen these securities trade at higher rates in the secondary market. We have seen the bids for the 2026s at 10.2 levels, 5 basis points above where they closed at the auction. But the bears, the people offering to sell these bonds, have stayed stagnant at about 10.1. So we've seen a mismatch in both those activities this week. For the mid-tenured securities, those are the 2036s. We've seen trades concluded there at about 12.2 levels. For the 2042s, the long end, we've seen the offer slightly higher than the 12.7 stop rates at the auction at 12.72, but we've seen the bulls bid at about 12.76 levels at the bond market.
Oh, speaking still on auctions, there is one today, an Audu auction. Could you bring us up to speed in terms of what an offer and what stop rates are expected?
Okay, actually the Audu auction did hold yesterday.
Okay.
The CBN offered 50 billion across the short, medium and long tenured maturities. There were no real surprises there as the CBN sold exactly what was offered, 50 billion. The offer on the short end was 10 billion. The offer on the medium tenor was 10 billion as well, while we saw 30 billion as the offer on the long end. The stop rates were maintained from the previous auctions at 7%, 8.5% and 10.1%. Also earlier in the week, we had the NTB auction where the DMO came in to offer about 143 billion, which is exactly what matured yesterday on Thursday. This auction was held on Wednesday, the day before that maturity. So we saw the subscription at that auction come in at about 170% above the amount on offer at about 248 billion, while we saw the DMO sell just below that subscription, about 120% of the amount on offer at about 174 billion across the 91, 182 and 364-day maturities. We saw movement in rates. We saw the 91-day close 1 basis point higher at 1.75% from 1.74% that it closed at the previous auction. We saw rates maintained on the 182-day at 3%, while we saw a 45 basis point increase on the 364-day maturity from 4% to 4.45%. It's noteworthy that this is the first increase in stop rates we have seen on the 364-day in about 6 auctions. So the market has reacted to that.
All right, finally, we have less than a minute left. Just an update on FX market. Talk to us about the Smith's auction and, of course, the scale of the demand at the market.
Okay, so the demand has continued to outweigh the supply in that market, but we've seen the CBN sustain its interventions. There's a retail SMIS auction today. There was an FPI intervention on Monday and on Wednesday. There was also the FX intervention for SMEs and invisibles that held on Monday. So consequently, as a result of the interplay of these activities, we've seen the INE rates appreciate from about 417 naira per dollar to 416.17 naira per dollar.